So, guys, before I get started, I just want to see if I am hosting this call for the right people. Yeah, because I don't want it to be that I'm hosting this call and people are not serious. So I want to see if this call is for the right people. So, guys, just drop it in the chat, drop some fire in the chat, drop some 786 in the chat if you are fired up for this call. Because the person I'm going to be bringing on is not just a beast trader. She is an absolutely amazing leader. She's someone who I've learned everything from myself as well. And guys, I know you all want to meet that person who's my mentor. This is a person who I've learned from such a servant leader. Like when I first met her, she just offered to help me out with trading, and that's actually what inspired me to do a lot better. And it's because of her that I am where I am today. So if you're excited to learn from her directly, just drop some fire in the chat. And she's actually gone quite through a lot to be able to get onto this call because she had some personal issues, but she's actually come onto this call just for you lot. So fire it up, make sure you're showing your appreciation to her. And without further ado, I'd like to bring on Rafia Khanom. I've made you host. Are you able to hear me?
Yeah, I can hear you.
Perfect. Thank you. So it's all over to you, Rafia.
Well, thank you for the introduction. And yeah, no, Muhammad, he's gone through quite a lot. Like, everyone knows who he is. He's a very good, very good leader, might I add. Um, Regardless, like he'll actually go above and beyond for you guys. So, you know, big up Muhammad for, hosting this call. But I'm gonna go through just a few things really quickly. Um, so you understand like the concept of like smart money, etc. But if you do have any questions, Mohammed, is it possible if you could read it out for me because I won't be able to keep on checking the call. Um, yeah, okay, cool. So where I'm going to start off with is the two types of trading and the types of people that are in the market. So majority of you would know that the market is it's actually controlled by six different types of people. One of them being the banks, another one being hedge funds, and obviously we may not own the money the way they do, but that's the reason why you can learn the concepts just like them. The two types of traders there are in a market is retail traders and institutional traders, also known as smart money traders. The thing that people get wrong is in terms of retail trading, it does work to a certain extent, but you need to understand that 96% of the market traders actually fail because they're using retail trading. So today, what I will be introducing to you is smart money concept, also known as institutional. So the reason why we trade this way is because institutes like banks, hedge funds, like I've mentioned before, they're only like 5% of the market, but the market traders, but they actually move the entire market. So obviously you'd want to trade the exact same way that they do just to get the same entries that they do. You don't want to have stop losses that are huge, like 30 pips. You may think 20, 25, 30 pips is actually normal for you on average, but you don't need to have such a big risk because when it does come down to it, you can be having stop loss like 25 pips or whatever, and your TP would be 100 pips, but that is a 1 to 4 risk to reward. You wouldn't really want that. Why would you want entries that may not be perfect when you can have that through institutional means? So basically, with institutional, you'd want to catch the waves that the banks would be trading. I don't know how much like anyone knows about institutional trading here, but it's just the way that the market, you can get the market movement the way the banks and the institutes get it. You may see like retail trade, like I'm going to go through just a bit of basics like support resistance, etc. In terms of institutional trading, if you were to say that to anyone who trades institutionally, you would like they would start laughing at you. Like they would literally just be like, "Oh, okay, cool, support and resistance." No, stuff like that. It would get FU'd. It's literally in the word FU. That's another concept that I'm going to go through with. So with FU candles, it's basically a candle that takes out the previous area of liquidity, so the previous buy to sell or the sell to buy. Where you find that is you have like a whole area of liquidity, meaning in terms of retail aspects. Let me just share my screen.
Yo guys, quick time. For those of you who don't know what smart money concepts are, who don't know what institutional trading concepts are, FU candles and all of that, please can you just drop a 1 in the chat so we know if you're new to these kind of concepts?
Oh yeah.
Okay, so there are quite a few people who are new to these concepts, and I guess we'll just go through them, yeah? Thank you
Okay,
so
cool.
much.
So yeah, like I mentioned before, institutional is the way the banks would trade, hedge funds, the market movers would actually trade it. And that's where you have moves such as this area here. You can see it right at the bottom where my entry is. The reason why we do it like that is because this here itself would be classified as an FE candle purely because retail traders, they would be looking at, sorry, they would be looking around somewhere around here, you know, okay, this is your general support slash resistance area. Price shouldn't be breaking down below it. If it does break below it, it would test that area to drop again. But no, it doesn't work like that. You have candles like that where there's areas of liquidity that area of liquidity, when it does get taken out, it would be a buy to sell. I can't go into much details right now because you'd have to like actually learn properly institution from the beginning. But that's just a basic example of an FU candle where you can see that it broke price completely. Okay, cool. So if I get rid of that, another area would be, okay, so where you find FU candles would be if there are liquidity meaning where money is stacked. We can see here that money is stacked somewhere around here. You can see that every time it's your basic support area, your basic support resistance area. And you can see that once the money has been captured here, that area would come and take the entire area out. And obviously with other confluences of institutional candles, you'll get your perfect entry from there. So that's another example of an area where internally you can get FE candles on larger time frames, you can get it on smaller time frames as well. On smaller time frame, it's known as internal liquidity that gets taken out. Purely because they don't tend to last as long as they would on bigger time frames, but they still do work. Yeah, so that's that's basically internal liquidity, FU candles, which is a smart money concept, and the reason why we trade institutionally, so we can have such small stop losses. So like here, you can read it that it's a 5 pip stop loss for it, 463 pip take profit, and we can see here it worked perfectly. I don't know what else to go over with you lot right now because obviously I don't know your level of understanding. But
So there's
Muhammad
someone
is
who
there.
asked in the chat if you can break down those entries. So do you think that you can do that like really briefly?
Yeah, sure. Okay, so with this one, the reason why my entry was the way I trade is I have a five-step trading plan. So the first step would be to look at the overall market trend. So at that point in time, on like the daily, etc., I saw that there was a distribution schematic going on. Also, for anyone that knows about the drop-based drop, this is another example of that. So the overall trend is a downtrend. We've got that. Second point that I look at is basically a liquidity void. So a liquidity void is a quick run for the money. It's also known as fair value gap. So you've got this whole, at this point, it was only like up to here that was done. So we only had this area, nothing else after this came, obviously. So when we were looking at it, well, when I was looking at it, I saw that there was this whole run for the money going down, but every time it got retested, only here it did not get retested at all. So this was the area that I was targeting for a retest to happen. With that, with that fair value gap, also known as liquidity void, the third step comes in, which is equal highs. So equal highs are these areas here where there are liquidity stacked. What I want is, in terms of a sell, because it was a downtrend, I'd be looking for the equal highs to be taken out because we sell from the highest point and we buy from the lowest point. So when I saw that there was these highs forming, I automatically knew to place my basically my entry somewhere around here. But that doesn't mean that that's where your entry would be. It's just an understanding of me literally plotting this horizontal rate anywhere. That's literally what I did at that point in time. So that's 3 steps done. So the first was the trend, the market trend itself. The second was liquidity void, and the third step was looking for equal highs or lows to be taken out depending on the direction. So those 3 are basically market structure, and then the next 2 steps that I do tell you about, they're going to be individual candle basis themselves. Let me just find out the date of that, 26th of May. Sorry, it just makes it easier instead of me having to scroll back every now and again. Oh, I forgot the time actually. Okay, yeah, cool. So if I go down to lower time frame, step number 4 is me finding order blocks. So I'd need to find an order block, and step number 5 is an imbalance. Step number 4, it's basically finding the opposite. Basically, if you're in a downtrend, you'd want to find the candle that goes in the opposite direction. So in this case, because we're going down, the opposite direction would be a green candle, which is a buy candle. So that's exactly what we're looking for. At this present moment in time, this was the only one that I could find, but for me, because it has been tapped into, it basically meant that it was used. So the only way I could do this is go down to smaller time frames every single time to see. Yeah, so I did continue going to lower time frames, etc. And the way you know which order block is the most significant is the ones that have step number 5 straight after it. And step number 5 is imbalances. Imbalances are basically large candles, basically a large movement candle that happens. And the reason why market comes to retest that price again is because the market moves in pattern. It always moves in balances. If there's something wrong within the market, like there's an imbalance within the market will come and correct itself again. So within this area, that random line that I had shown you before that I would have put it somewhere here, because that is where we have an up candle with an imbalance after it. But the only way you would know whether that order block and that imbalance is still valid is if you go down to lower time frames to see if it's been tested. So I basically did that exact same thing over and over again until I got it all the way down to the minute time frame. Here, that order block here did get retested into. There's 3 ways of having an order block tapped into. So the first way is the wick, the open of the wick. The second is the open of the body, and the third is 50% of that candle. If you were to take 50% of that candle, or any 3 steps that I had mentioned, this imbalance that came after it would have filled that in anyway, so that would have been used. It would have been invalid. But let's just keep that line there just for the sake of having that line there and seeing if on the lower time frame it was retested again. So here we can see that on a 5 minute it has completely disappeared, so there is no need of having this line there. But if I look at the 5 minute time frame, we've got this opposite moving candle, which is step number 4. We've also got that imbalance candle that comes after, and after that, like I mentioned before, we do need to have equal highs. On the 1 hour time frame, we did have equal highs to be taken out, but we also have internal liquidity. Internal liquidity equal highs are basically lower time frame equal highs. We have exactly that showing right here. It may not have lasted a long time, but it's still on the smaller time frame, which makes it internal. So going all the way down to the 1 minute, on the 5 minute, we still had that there. Oh, okay, it's not going to show me because it only goes back 1,000 candles of any time frame. But even on the 3 minute, we still have that same entry here. Nothing that came to retest it again. It was literally a drop, opposite moving candle, and a drop again. Nothing came to retest that area again. That's the reason why I had my entry there and I had my stop loss just above the wick of that candle. Because if it's going in your direction, it shouldn't go higher than that order block. And at that same time, when it does test that step number 4, which is the order block, step number 5, which is the imbalance, gets filled as well. You always want the market to correct itself, and the way market corrected itself was filling in the imbalance, and that's exactly what I did. hence the reason why the entry was there, and it filled in perfectly. So that's how I got that. Is there any other questions?
Yo, that is crazy, man. Literally the best pew entry you can ever get. That's madness, mashallah, man. Yeah, what is drawdown?
We also got the buy for it. Literally no drawdown, and it had a 5 pip stop loss as well.
This is what you call house of pips, innit? Oh, come on, man. Come on.
Definitely.
I'm so
House
grateful.
of pips.
Yes, house of pips. That's what it's all about. HOP. Come on, guys. Drop HOP in the chat. Drop it.
I actually have to go back to see that. HOP, everyone.
Spam it. Yes, you know that. HOP, House of Pips, the founder of House of Pips herself, Rafia, on this call. I'm honestly so grateful to have you on this call. Thank you so much for that, Rafia.
No, always to help you. You've done so much for everyone. It's only fair to give back.
And it's all thanks to you anyway, so don't watch. Guys, those of you in the chat who are asking questions, don't worry, we're about to have a Q&A soon anyways. So those will all be answered, inshallah. Thank you so much, Rafia. Guys, show some love onto her IG. If you want to drop your IG in the chat, Rafia, go ahead. So everyone can at you, show some love, drop some follows. Let's go. All right, guys. So you've all heard from Rafia. You've got the basics of institutional concepts and smart money concepts. Now I will hold a quick Q&A session for those people who've got questions. So fire ahead, ask questions, and please do calm down with the chat. It's getting a bit too much. How do you find an institutional candle? All right, let me share my screen and I'll answer your question right away. Can you break down the fair value gap? What makes an institutional candle valid? All right, I'll answer all three of those questions for now. Yeah, so no more questions for now until I answer them three. So basically, what is an institutional candle? An institutional candle can be of two types. One is at the start of a move, or one is in the middle of a move. Yeah, and what I mean by a move is either an uptrend or a downtrend. Okay, so an institutional candle is an opposite candle before a big move, or it's the opposite candle within a big move. So I know you're probably thinking, what the heck does that mean? But let me give you a live example. Yeah. So before this whole move down, we had an institutional candle over here. Yeah, that was like the last buy before the sell. Then within the move, we've got buy candles within the move down. Yeah. So as you can see, price came back, retested that perfectly. We've got a buy candle here before the move down. Price came back, retested it perfectly. We've got a buy candle here before the move down. Price came back and retested it perfectly. Yeah. So you have institutional candles which come before big moves. So like a buy up here before this whole move down, and even that was retested perfectly. Yeah. And then you've got the institutional candles within the move as well. And what makes an institutional candle valid? From my perspective, this is not something which is textbook, but it's where, for example, if it's an FU candle, because that is a type of institutional candle, an FU candle where liquidity has been swept. Yeah. So where you can see clearly that stop losses of retail traders have been taken, those who trade retail concepts, you know that the banks entered there, so they're in drawdown. So that's something that you can use to your advantage and enter based upon that retest. Secondly, what you've got is those candles that come in between the moves. So those are also known as order blocks. That's basically where the banks stack their orders in blocks. Yeah. So where the banks stack their orders, now how you can tell that that is valid is when there's clearly a buy to sell or a sell to buy. When there's clearly, you can see that the banks and the institutions have entered a buy to sell price down, or have entered a sell to move price up. Yeah. And someone asked, what is a fair value gap? A fair value gap is basically where there's a large move down or a large move up, and there's no wicks to the right or left of that move. So as you can see over here, there was a large move down. There were wicks to the right and left over there, wicks to the right and left over there. But the only place where we can see that there was only selling pressure was in this area. So we can expect price to come back to this area and reject off it. Yeah. And the reasons for that are all explained in the How Do I Trade course. For those of you who don't know what the How Do I Trade course is, this is the course itself, and you can see that there are 3 phases. Each phase has about 5 lessons, and these lessons actually teach you exactly how the banks trade. These lessons teach you exactly how the institutions trade, because our educators, so I'm ever so grateful to them, these educators that have spent years and years gathering the knowledge of how the banks and institutions move the market, they have actually put together a course for us which has only got 15 lessons in it, but that goes over exactly how to trade like the banks and the institutions, the same concepts that they use. So this is something that you can use to your advantage. This is something that you can learn from. For those of you who've got access to it, you can watch it. For those of you who don't have access to it, feel free to hit me up after this call. As you can see, you've got my Instagram over here at MK Trades, my Telegram, Muhammed K786, and Discord, Mr. Steal Your Pips, #077. And let me get back to the chat to answer more questions. But these concepts about institutional candles, footprints, fair value gaps, all these concepts are actually taught on that course. Let me see a few more questions. Would you enter off the wick of the candle when it has a small body? The way I enter is I've got my entries on a certain way, and I will show that on the zooms that I do during the week when I'm actually marking up charts. Is the entry at the bottom wick of the candle? That as well. Now, all these concepts are actually taught in the How Do I Trade course anyways. So just refer back to it, and you can see how they teach you to enter those trades. Is FBG the same as imbalance? Yep. Fair value gap, inefficient price action, imbalance. They're all different names for the same thing. Can you explain how to correctly choose the right order block for entries, as sometimes there may be more than one around the same zone? What you want to look for is liquidity below or above the area, and then and try to find where the FU candle would come up to, or where you'll see Wyckoff distribution or accumulation. Now, Wyckoff is quite powerful because it's a concept that has been implemented in the markets before Forex even began. Why? Because it was made, it was invented at the time when there was only the stocks market, and that's how old it is. That's how we know it's been going on for so many years that it has to be right. So you can integrate smart money concepts with Wyckoff to get the best of entries. So if there is no wick on the imbalance, it's called fair value. If there's no wick to the right or left of it, yeah. So fair value and imbalance is the same thing. On lower time frames, I see more than one valid OB. How do we know which one to use for entry? I've just explained that. What times and how often are these Zoom calls usually, and what will the bootcamp times be? All right, these Zoom calls, I would host them every now and then, probably once a month, once every 2 months, or once we hit like a milestone in the Smart Money Telegram. And the Smart Money Telegram actually hit the milestone of 750 members plus. Once we hit 1,000 members, I'll probably hold another big Zoom. We would most likely have a special guest on there. But these calls are not that often. However, we do have calls going on every single day for the team, for those members of IM. We've got the New York session where we go live and teach and mark up charts live. We've got the Smart Money mentors who hop on there. So for those of you who are in IM, you've got access to that. Just hit me up. If you're not in IM and you want access to it, hit me up as well. When do you move your SL? Now, I personally move my SL once I see that there's been a breakout structure and a retest, and price has gone in the direction that I want. Then I would move it to break even. Wyckoff, can I go over Wyckoff? So Wyckoff is basically like a market cycle. Yeah, we've also got a course on Wyckoff, bullishrevolution.com, put together by Zach McDonald. Now this web page actually got all the text and all the logic behind it, but the videos, you have to have access to go live to access them. If you don't, hit me up. All right. So the Wyckoff cycle is like a few phases put together that makes up the cycle. So first you've got the accumulation phase, where price is oversold. Now it's not oversold on the RSI or on the stochastic or whatever. It's oversold by the banks and institutions. That price actually accumulates. So it won't reverse instantly. It will accumulate to push price up. Then there's a little markup, and after the markup, there's a distribution phase where price is overbought, and then it starts to drop down. Yeah. So yeah, so then there's a markdown. Now after the markdown comes accumulation, markup, but there's actually a more advanced section to it as well. That where you have accumulation, you have a markup, then you have reaccumulation, then you have a markup again, then you have distribution and the markdown, then you have redistribution and a markdown, and that's how the cycle goes on. And we will be speaking more about that on the boot camp, which is going to be starting on Monday. I'll go over that in a bit. But yeah, Wyckoff is literally just you play out these schematics. Now these are the basic schematics to show you accumulation and distribution in the market. The more advanced ones will be taught on the bootcamp by a special guest, and I won't say his name because it's just going to be next level, inshallah. So that's pretty much what Wyckoff is all about. Let me actually show you guys what the bootcamp is going to be like.
تسبيحا حلوا كالعنبر واجعل إبصارك للتقوى عنوانا للحب الأخضر واجعل إبصارك للتقوى عنوانا للحب الأخضر.
So you all know already, this bootcamp is just going to be a complete shutdown. It's going to be taking place next Monday. It's something everyone's been waiting for over a month, and it's finally going to be coming into play next week. Oh my God, I'm just so excited for it because the best traders in the whole of Traders Empire, along with me as well, will basically be going over the concepts. Now, we've taught a bit of basics here, but that's slightly more advanced stuff. There, we'll be teaching how to get 1 to 100 risk to reward ratios, how to use the lower time frames, how to make use of the smaller time frames for scalping, how to start with scalps and aim for intradays and swings. So you'll literally get the best of the best. Now, for those of you who want access to it, just hit me up as well, and I will help you with that. What validates an order block? The same as an institutional candle, where you know that the banks and institutions have bought to sell or they have sold to buy. How do you know an imbalance is still valid and what areas are invalid? To know if an imbalance is valid or not, you just go down to the smaller time frames and to basically ensure if it's valid or not. So if there is still imbalance on the smaller time frames as well, that means it is still valid. However, there's also an indicator which you can use, which is called the fixed range indicator, and you can bring it up between 2 candles or however many candles you want, but I normally just place it on the imbalance one. Click show values and zoom into it. Oops. And once you zoom into it, you can literally see that how many lots there were in buys and how many there were in sells. And we already know that imbalance is valid when there's only either selling or there's only buying. Yeah. So to see where there's the least amount of buying in this area, you will know that's your point of interest. Yeah. But to actually use this, you have to have the pro version of TradingView. If you don't, then I would advise you to invest in yourself and actually get a hold of it. If not, then you'd have to just go down to the smaller time frames to make sure that the area is still valid as imbalance. How much Wyckoff do you use? As you can see over here as well, I've got Wyckoff marked up on the 3-minute time frame. We've got the PS, the SC, AR, ST over here, and I am expecting price to push down to 1.24 to then rocket because that's also a quarter level. So that's not a trade. I mean, it's not a signal. We're not financial advisors, but you can use this for educational purposes. How did the XABCD pattern determine your entry? It did not. I just drew that because we've got the harmonic scanner. So this XABCD pattern is a harmonic pattern, and I just got that from the harmonic scanner as part of this platform. We've also got access to the harmonic scanner, and if you don't have access to it, hit me up. As you can see over here, we've got the scanner that scans the markets, brings these patterns for you. It tells you where to put your entry, where to put your targets, where to put your stop loss for harmonic patterns. So for those of you who like to trade your harmonics, this is the perfect thing for you. And I just use it as like an extra confirmation for my entries. I don't actually use the harmonic scanner only for my entries because, as you can see, the risk to reward isn't too great. But once you implement smart money concepts with it, then you'd have a lot better win rate, a lot better success. Yeah. So that's basically why I've got this sharp pattern over here, because the harmonic scanner actually called it out. I put it on here, as you can see, it was a perfect entry. Let me get back to the chat. Oh gosh, there's a lot. Is there any Wyckoff course? Yeah, so that course is on Wyckoff. There's also an educator on Go Live. So Go Live is basically the platform where we got the live education, and I believe he was live a few moments ago. But if you come over to the Forex section, come over to Forex Advanced, and you scroll down, there's an individual by the name of Zach McDonald, and he uses Wyckoff quite a lot. You can come over to his recorded sessions, watch them favorite sessions. There's one by me as well where I was able to feature on his live, so you can watch that. That will really help you when it comes to your risk to reward and sniping. And apart from that, yeah, just watch him live because he uses Wyckoff quite a lot, and he's also put together the course on bullishrevolution.com, which goes over Wyckoff quite well. Do you know how to decide an entry position if liquidity is both at the top and bottom? I'll say don't have FOMO. There's about 50 other pairs. You can just go over to a different pair or just wait for it to break out of either. What's the definition of order block where there's a buy to sell or a sell to buy? Can I get the link to the Telegram? Sure, let me just pull up the link. So there's a link in the chat right now. There's also one we've got for the chat, and for those of you who want access to the exclusive chat just for IM, just send me a text on Telegram. My handles are right here for my social media platforms, and I will add you into them. Will there be Zooms next week for those not in TE? If you're not in TE, but if you're in the Smart Money exclusive Telegram, I may send out the link for the bootcamp over there. For the person who was asking, what times the bootcamp calls will be, they will be at 10 p.m. UK time, and they will be hosted by Akif Akhtar, Chairman 10. Oh, Ikwa, thank you very much for posting the Telegram link. The Discord link, let me just grab the link for you real quick. We don't really use the Discord much anymore, but it's good for the announcements and stuff. Let me get back to the rest of the questions. The cost of the bootcamp, there's no extra cost of the bootcamp. If you're in IM, then it's free of charge. So it comes at no extra cost. Just hit me up in my DMs and I'll add you to it. This institutional learning doesn't require any additional IM add-on or service, right? So we have full access through TradingView charts for analysis. Yeah, if you're already in IM, there's no extra cost to access those courses, to access the Trade House educators on Go Live. It's all completely free of charge. What time is the bootcamp starting? So it will be at 10 p.m. UK time. Difference between fair value gap and imbalance is the same thing. What's the name of the indicator? If you click on indicators, then there's one which is called volume profile, and click on fixed range. That brings up that one, and I've just put it onto my favorites. I've also got this one on my favorites because I was trying it out, but not the best. Why do you use a harmonic scanner? For basically to have a look at what charts to mark up myself, and to integrate harmonics with smart money concepts. They actually give you quite beautiful entries. Is TE IMO group, or can one join? For those of you who are not in IM, Traders Empire is basically a team within IM, and as part of Traders Empire, you've got House of Pips and of course Smart Money Snipers. So if you are not in IM and you wish to join, then you will join Smart Money Snipers. You'll also be within House of Pips, and you'll also be within Traders Empire. You'll have access to all the training sessions by TE, by House of Pips, and by me myself as well, and by all the mentors in our team. You'll have access to it. Cost of IM, just hit me up after this call and I will help you out with that. What's your Insta? My Insta is at MK Trades. Let me just put this in the chat so everyone can see my handles on the different platforms. What is a liquidity void? That was basically answered by Rafia on the call earlier. I mean, on this call, but earlier on. So if you want, just hit me up afterwards for the recording and I'll help you out with that. Is there any other smart money chats I need to be in? If you are in IM already, just message me and I will refer you to the bank. The bank is literally amazing when it comes to smart money. And I can also add you to the WhatsApp group chats and the exclusive one on Telegram as well. And an imbalance above a drop-based drop, which will be respected. Normally, if there's an imbalance below a drop-based drop or above a rally-based rally, that's then I would normally use that rally-based rally and drop-based drop for the entry. Where can I learn drop-based drop? Just hit me up after this call and I can help you out with that. It's just to say you can look at 7, 8, and 9 video on Trader House training without bounce back. You can't look at 7, 8, and 9. Yeah, just adding on bounce back is only about $15 extra a month or something. Like, just invest in yourself, use that, because the education of that, they actually trade live. They trade live for London and New York sessions, if I'm not mistaken, and you can just trade with them. You can literally copy the best of the best educators around the whole world. So when it comes to bounce back, I'll strongly advise you guys to add it in. DM me on Insta, I'll send you a link. No, you don't. You DM MK Trades and I'll help you out. What will it cost to subscribe to your course? It's not a course, it's actually a whole platform, which is IM. You also get access to all the teams and everything. I will help you out with that right after this call. So does anyone have any more questions? If not, then I will wrap up this call. But I'm sure that you've got a lot more questions. I can't believe that I've actually gone through all the questions. There must be more coming in. All right, I guess that's the end of it then. If there's no more questions, then I'll leave you all with that. I'll see you all at the top because the bottom's too crowded. If you do have more questions which you remember after this call, does this training require bounce back? No, it doesn't. That's why you went through all the questions. Thank you. Really looking forward to the boot camp. Oh, the boot camp's gonna be a complete shutdown. But guys, I'll see you all on Monday at the boot camp. I'll see you on the New York sessions starting from next week. I mean, ongoing next week. And I'll see you all at the top because the bottom's too crowded. Take care, guys. Peace. Assalamu alaikum.